Welcome to the Great Homeowners Real Estate Market Trends for April. I'm John Demeray. This information is taken from RE Colorado, that's the Metro Denver MLS provider, and it has the statistics from March's market activity. These stats are from the 11 counties that make up the greater Metro Denver area. The number of closed properties at 3,567, it was equal to last March's numbers. In February, we were trailing 2024 by 10% in closed properties. This number is up 32% from February's numbers. Both market segments, the single-family market and the multifamily market, outperformed February's numbers to a similar degree. The median close price was $595,000. The combined number is equal to last year, and it's actually down 1% from February's numbers. But for single-family houses, the median close price was $665,000, which was up from $646,000 in February. And for townhouses and condominiums, the median close price was $395,000, which was down from February's median close price of $405,000. Now keep in mind that all statistics that analyze the closed numbers, units sold as well as closed prices, are a reflection of the activity from the month before. So while these stats are from March's activity as a whole, the closed numbers reflect the activity of properties that went under contract primarily in February and early March. There were 6,512 properties added to the market in March. This was 30% more than March of 2024, 32% more than February's numbers. Now, last month, I stated that this particular chart showed that the market was picking up steam a month ahead of time as compared to last year. This month, it shows the same trend and even to a larger degree, meaning that the extent of an increase in the market is not only a month sooner, but it's also higher in numbers from last year. While the closed listing numbers trailed the market by about a month, the pending listing number is the most current indicator of how active our market is at a given time. So in March, there were 4,700 properties to go under contract. This is a 16% increase year over year, and it's a 43% increase month over month. With the big surge in properties coming on the market in January and February, it's nice to see that the buyers are actively buying the inventory with these numbers. This metric shows the number of days a property stays on the market before going under contract. At 19 days, this was 7 days longer than last March. More importantly, though, it is 14 days less than February's number, 28 days less than January's number. The $500,000 to $600,000 price range was again the most active in March, both for properties that closed as well as properties that came on the market. This month is uniformly lower in numbers for days on the market, but generally they're a few days higher in the $200,000 to $600,000 price range, and it's lower in the $700,000 to $2 million price range. This indicates that the single-family market is a little faster than the condominium townhouse market. Standing inventory, which is the number of active listings for sale at the time that this data was pulled, was at 10,376 homes. This is a 69% jump from last year. The gross sales volume was 1% lower than last year, and that coincides with the lack of change in the closed numbers year over year. So what do these numbers mean? Last month, we started to see clear signs that we had switched to a seller's market. This month, we are seeing more homes coming on the market, an increase in sold properties as compared to February. We're seeing a flat sales price year over year, a 1% drop month over month. But looking closer at these numbers, single-family homes increased by almost $20,000 from February, while condominiums and townhouses dropped $10,000 in February, from February to March. There's been an increase in pending listings both month over month and year over year, and a 14-day reduction in days on the market month over month. Overall, we're seeing a busy market this spring, but with a different look for the two different market segments, single family and condominiums, townhomes. The single family product is continuing to be fast, with more homes having competing buyers and prices continuing to go higher. The condo market, however, seems to be lagging as compared to February. Interest rates in March were in the mid-sixes. April has seen more volatility as the bond market has been uneasy with the tariffs, and now with the possibility that the tariffs would be reintroduced in 3 months, the bond markets are still jittery. And what that means is that the interest rates are staying in the high sixes. What this means for us is we may see that the condo market will continue to be held down some as a result of the interest rates, while the single family market has a healthy selling spring season. Anyway, thanks so much for your time. As always, if you have any specific questions for me, feel free to reach out to me. Have a great month.